Bill Ben here. Is West been a heavy week across the markets in all asset classes as the sell everything mentality takes a hold. So we're going to have a look at the history of rate cuts against the S&P itself, then we'll move into the US dollar and then finish off with a look at gold and silver. So here's just a chart of the S&P on a monthly, and below here, this is the US cash rate. So I think the point to look at here as a case in history is if you look at this sell-off, this would be the tech wreck, but if you look at this sell-off and you look at what the rates do, the market and the interest rate go south together in concert, okay, until the rate gets low enough that the buyers step in. Same thing here happened here with the GFC. Okay, so the market's getting tanked as the rates are going to come off until we hit the bottom of the rates. Now, obviously, COVID was a little bit different because that was such a quick event. So I don't know if I'd put too much credence into that. But certainly just going back to look at these two examples and now looking at where we are now, because this feels a bit more like a run-of-the-mill market prepping for recession. And, there's a lot of deck shuffling going on. The point here is that the market can come down at the same time as the rates can. So what I'm saying is don't discount the fact that we do this while this is happening. Okay, this is certainly possible. I don't think the Fed are going to cut rates to zero, of course, but the point here is that rate cuts may not necessarily immediately save the market. We could be in for quite a few months of heavy price action. So now at this point, we've got to consider the S&P and the greater macro picture. So, at the moment, and this is what you've got to keep in mind, I think, at the moment, we haven't fallen that far, even though it feels like it, but we haven't even gone through a market correction yet. Okay, so the S&P index itself has got to get to, 5,110 roughly, before it's into an official correction. And a full-blown bear market is not until 4,500 and sort of 40 odd. That would represent 20% down from the peak. Try that again. It's interesting to note that a 20% pullback would put us right back into the retracement of the last large swing, right back down to the 50% line, which would line up with the old peak that we had back in July 2023. Now, it's not impossible that the market goes this far. Certainly, I think at a minimum we can come down and challenge this bottom here from from April this year. Definitely, the market could easily work its way down there. And it'll happen fast if it does happen. Now, as a quick side note on market dynamics here, look what's happened with the S&P since we've come off this low in October 22. Okay, so we had 32% rally, a pullback. We had a 28% rally. We had a pullback. We've had a 14% rally. So the upswings have definitely shrunk in their size and their speed and their magnitude, and that was a warning shot. Coupled with the S&P, it's a very slight divergence, but it was there, okay, between this peak, and you can see what happens when it doesn't mean that the market is going to necessarily come off. In this case, it has, but you can see here it trailed along the top until it finally gave up. But it probably just means that the top is getting ripe. Okay, and I think with this dynamic going on, plus the changing scene in terms of macro, we can see the data starting to weaken off now, means that we are quite likely in for a market correction. So just looking at the dollar index here, obviously there has been more movement in the dollar yen, which has certainly kept the US dollar under pressure. But of course, the payrolls figure that's come out has really put the cat amongst the pigeons in terms of the US dollar, and now the market is going to very quickly pivot towards the idea that we're going to get 50 in September. I'm not sure I'm going to subscribe to that exactly just yet. I think that's probably still a little bit overly aggressive. But as we can see, we can remove this now. This was the range we were looking at last week. We can see now that the US dollar or the dollar index is more or less done what we were expecting, and now it's continuing on its path further lower. So how low does this go? I don't know. But something obviously did very interestingly happen today on Friday, and that, of course, is that the US dollar weakened and gold fell in price. So as I've said before, even though the US dollar has fallen in price, it doesn't necessarily mean that gold is going to rally, but it's just helpful for gold to rally if the US dollar is falling, and I expect more falls into next week. So just coming in here and looking at gold, we're just on the hourly, and this is what we were kind of looking for to happen next week. This is where we left it last week. So we were just looking for a move outside of the channel and a bit of an extension away. And I think it's fair to say that's what we got. Not quite along the path that I was thinking, but more or less that's what's happened. So this is good. This is setting up for us quite nicely now. So let's just clean this chart up a little bit. So you can see here, we got the nice push up here, and we got the nice retracement, just peaked through that 61.8, but then of course we've extended on. So this now looks very much like a quite a nicely formed impulse. And you've got to say overall, quite a nice looking structure. So, we've got, the 1, 2, a nice extended 3, this quite wobbly, choppy 4, which is what we'd expect. And I think you can sort of go 1, 2, 3, 4, 5 up here to make a 5th. So that looks good. That looks like an impulse. Now, as we track this back, that kind of goes well because we've got a nice 3-wave swing here, and then we've got an impulse. So what would we expect after 5 waves? 3 waves back before the next run. So I think this is what is setting up for us next week. So just looking at what's going, because this was a waterfall, right? And what's going on here is, and this is the example, because you could be saying, well, the US dollar's coming off, why is gold getting hammered? Well, I think it's just a case of sell everything because there's just sort of a bit of mass panic in the air. So everything's getting dumped and gold with it. So what would we be looking for? We've come back here almost 50%. Now, just for me, just as a rule of thumb, what I would be looking for now, let's just clean this up a little bit further. I'm thinking about this whole move, okay, and I'm thinking about the retracement of it. So this might look a little bit crowded, but basically, what we've done so far is we have come down here 50% of this move, okay, and then on this little move, we've bounced back 50% here. So I'm just thinking about a little bit more downside. That would just be how I'd be looking at it. I wouldn't be rushing in to buy this just yet. It's not telling me buy because I've seen an impulse up. I'm waiting for 3 waves down. I think I've got 1 wave. I think I've got a corrective bounce. I'm looking for the next wave. Now, 1 to 1 would put us right back down here below 2400, below, sort of that 2375 area. I don't know if the market is going to get as low as that. Okay, I don't know if we can do that. I think that, it's not impossible. But what my plan would be once this low breaks here, so you're talking about 24.10, I'm on red alert for the possibility of a bottom coming in. I'm waiting for something to form. Okay, I'm not leaving a bit in there. I'm waiting for the possibility of something to form, and then I want to see something small like that coming away. At that point, I'm going long, and I'm going long on a bigger picture because this is. This is the internals, but this is what I'm going to look at in the big picture. This is what I'm thinking. So I'm thinking this is the 1 wave coming out of this triangle. This is the 1 wave. This is the 2 wave. This is the first little internal 1, 2, 3, 4, 5 up to get the 3rd wave of this degree. That's just the progression that I'm looking to happen. So I'm looking for this. Okay, this is what I'm concentrating on. This coming in sometime next week. Okay, but I don't know where it's going to be. Of course, it could be a lot lower. It could be a lot shallower. I don't know. But this is just the progression of how I'm seeing it unfolding, and this is what I'm looking to happen. Because when you think about Elliott, the 3rd of the 3rd, that is the one that you want to try to catch if you can. So the internal 3rd wave of the larger 3rd wave, okay, the big move, the strongest move out of the whole progression. That's the one you want, okay. But of course, this is a commodity, and often commodities, wave 5 can be the monster one. But nonetheless, you are expecting a stronger move in the 3rd wave there. So just as a basic measurement, this is where you would be thinking that 3rd wave comes in. But the way that the internals are going, to me, would suggest that perhaps we just do this as a okay, it's plausible that we could get 3, 4, and then 5 like that. Not impossible. This projection work is not it is. I mean, and we don't know where the bottom of this is going to be. I've just come off this. It might be a bit lower than that, which will maybe probably suit the picture a little bit further. This is all projection work. We don't know what's going to happen. This is simply a roadmap that we might map out to go, okay, well, how can price get up to here? And this is kind of how I would expect it to go. So I'm on the lookout. But of course, we don't have the Fed until September, so we've got a little bit of time to go before whatever these potential rate cuts coming in. And I think the Fed will probably now cut in September. Just don't know about 50. But either way, I think gold is headed higher. I think that's the takeaway, and that is the plan that I'm looking for overall. So just coming in here to look at silver, a little bit tougher. Okay, I think gold is much cleaner at the moment. Silver's just proving to be a little bit problematic. So the one thing we can say about silver is that we have come outside this trend channel, this steep little trend channel now. So that one's kind of done. I think we can probably get that off the chart because it's not helping us anymore. So the price action in here isn't quite as sweet as gold. Making an impulse out of this is problematic, even though to me that's an impulsive move. But trying to put 5 waves on it, you probably, this is the problem with Elliott, right? Sometimes it's clear and it can work out. Is this 1, 2, 3, 4, 5, and then you've got A, B, big C, B, C. That this is problematic because the correctional phase of this market, which you would probably have to count as all of this, the magnitude of that is quite big compared to this. So that's all right. We if Elliott doesn't suit us, we just put it aside and we just look at what we can see. So the thing about here is it's gone quite deep. It's gone a little bit deeper than what I would have hoped. But if this was going to be some sort of Elliott structure, then it's an expanded flat. Okay, so I think what you've got to do now, we just come down here to the 30, and this is difficult to track. I wouldn't be trading this; it's not very clean. But we're just looking at this now back to the 50. So this is kind of the same as gold. But if you're putting Elliott to this looks like it's in a different spot. I mean, maybe you could say this is 1, 2, 3, big ugly 4. Nah, you got to finish the 4 here. Then you got to it's terrible. So I think with with silver, this is what you're dealing with at the moment. Okay, and we just need to see which side breaks first. Are we going to go down here? Or are we going to go up here? Because if we can get above here, well, then you're interested in the next pullback. Okay, if we go the other way. I mean, this goes without saying. If we start going down here, well, then for me, you're standing aside. So you either want to sell it, and I'm not really keen to sell the metals, even though they have been hammered pretty hard, and the trend is your friend. I'm just big picture. I'd rather just let the short trades go by for the moment, any potential short trades, because my overall view is. My strongly held view is that the US dollar is going to weaken and the metals. My strong view is that the US dollar is going to weaken, the metals are going to rally, but that strong view is weakly held. I'll change it in a heartbeat, mate. I'm a trader. I reserve the right to change my mind at any time. So that's kind of where I'd sit with silver. This is just too messy. If it does this, great. I'm just still then going to wait for the repeat of that, which we don't have. So that's it. I don't think there's anything more to say about silver. Personally, I'd just steer clear of it. I think it's whatever's happened here. It's ugly. Okay, which silver often is. Okay, so we've got to start. I think that's all you can really say about silver for the moment. So I would certainly. Like I said, I mean, I think this is the bigger picture, and then you've got to wait for this to really get broken. And at that point, you're looking for the little retracement back to try to get long. Other than that, stand clear of the doors, I think. So that's it. Look, next week is definitely going to be wild. So, whatever you do, I would suggest that you just maybe reduce your size a little bit, maybe reduce size and widen stops so you can have a better chance of staying alive, because I think the range is going to be pretty wild. But I am looking for gold to find its feet. So we will see what happens next week. So thank you very much for watching. We'll see you next time. Bye.